Welcome, ladies and gentlemen. Robert Roy here from wealthbuildershq.com. I hope you're all having a fantastic day. Let's go ahead and make sure you all can hear me. If you would please go ahead and type the number 1 in the comment section to let me know that you can. I would greatly appreciate it. All right. I know we got a little bit of a delay from where I say it. Nothing worse than talking to yourself for an entire hour and no one can hear you. There we go. Lots of ones. Lots of ones. Perfect. Perfect. Thank you so much. Guys, what an amazing market we've got going on here this morning. S&P is at all-time highs, not near, at all-time highs. If we go take a look at my pre-market template, which is all my futures stuff, ES, which is S&P 500, vertical line is 5 o'clock last night when the market closed. The next candle is 6 o'clock yesterday where it opened, PM. You can see we had a good climb up through the European market open. You know, the pre-market, we were a little bit of a rise, and then we exploded into the early hours of the European market. We've had a little bit of a slide to the downside. Lower highs, bottoms were holding until this spike down just a couple of minutes ago. We've got to see if we could break above the recent highs we had here, which is that 42.53.76. But we're set for a nice bullish open this morning on the markets, both here on the S&P and on the NQ, which is the NASDAQ. Looks like another record day for the NASDAQ. So overall, it's rocking time. We've got a couple of major companies I want to look at today. One in particular right out of the box is Eli Lilly, LLY. They came out and announced their Alzheimer's drug, and they're up about $16. $17 now in pre-market. I want to take a look at an option strategy and see if I can't sell a put, do a bull put spread, something with an option strategy where I am selling, collecting premium, hopefully that is overvalued because the market maker has jacked it up on the announcement and is not going to pay attention to the strike prices that I'm going to be looking at, or as much attention. So JR said, selling puts is working fine so far for me. Excellent, JR. That's good. That's good. That's good. You're in, Gene. You're in. No worries. Fantastic. All right. All right. Hey, Voodoo, how you doing? Excellent. Good to see so many familiar names. Starting to recognize some of you in here and some that I haven't. So if this is your first time with me, welcome, welcome, welcome. So what do we got with the market now? We're looking at just under 2 minutes left. If we go back over here. All right. So you can see Eli Lilly on a 5-minute chart. We had this overall bearishness yesterday, actually the last couple of days. If we look at an end of day chart on Lilly, actually Lilly was one of our trade with Rob candidates that we did, which we actually did pretty well with, I believe. On Lilly, yeah, we did well. We made about $1,000 on Eli Lilly. I'll share that with you later. But I love the push up. It had this nice pullback back into the body of the large candle. It's sitting at a 0 line, which is a Fibonacci level. If we can get the bounce off of that level, under normal circumstances, that would be great. Here, we're already there. We've got 17 points up. So that puts us at 34. Oh, look, it's at about a Fibonacci level right now, 233.29. I love when people say fibs don't work. They work, folks. You just have to know how to use them. It's like anything else in life, right? There are indicators that work better for some than others, right? RSI I don't use very often. That doesn't mean it doesn't work. There's another coach that works with us at WealthbuildersHQ that's his primary indicator is RSI. All right, so let's see. We have right now, doesn't look like the options have opened yet. Well, we got one contract, and that was open interest, sorry. Nothing under volume yet. So it doesn't look like they've opened the options just yet. We're up about $19 on Lilly right now. What I'm looking to do is I'm looking to either A, sell a naked put, but instead of that, I would rather do a bull put spread. Bullish trade using puts, spreading out your risk with options. I want to look, if at all possible, back where we were yesterday before we made our move, which puts us back at about 220-ish or so. If I can get into that 220 position on Lilly, let's see. I'm still not seeing any volume yet. Let's see. And again, with the mismatch, the market maker's trying to figure out where are the buys, where are the sells, what are we going to do here, right? I don't want to give it a whole lot more time, though. So we're looking at 220s, right? At the 220 strike. So if we can sell the 220s and buy the 217.50, 217.50s as an insurance policy, that's what I'm looking to do. Look at that spread, that bid-ask spread on the 220s. They are jacking that thing up, which yesterday was the at-the-money option. They're jacking that position up. All right, we'll come back and look at it. I don't want to really hang too long on this and wait for them to open. Again, I do like Lilly. You also have ACN, which is Ascension. Right, nice move up. We're looking at about 285 yesterday. So let's see on ACN. Where are we at with 285s? No premium left in it. All right, we'll come back and look at that in a little bit. Next, this is my every morning routine, guys. I look at the biggest movers out there, and I look at the stocks that are really rocking it right now. GameStop is one of them. And I know some of you are saying, Rob, I'm just tired of hearing GameStop's name. I understand. Are you tired of making money? If you are, you're in the wrong place, because that's what this is all about. How do we make more money? GameStop, love it, love it, love it, love it. Right? If we look at GameStop right now, GME, okay. If we look at GameStop and say, all right, as long as we can maintain above this 156 level, it is awesome, right? So if we look at that 155s as our puts, so we can come down and find anything left for this week at 155, not really. 10 by 19, I can get 15 cents. It's okay. It's $100 bucks, $150 on 10 contracts. But I've got a lot of cash on hand or being held to take that position. So let's go look at next week. So we're looking at next week. This is July. Wow. 2nd already. Holy mackerel. Cannot believe it. So the 150s are giving us $1 by $1.20. Right? So if I go ahead and load that up, simple ease of all of this is to always just show the example with one contract. We could sell this put option, and here's what we're doing. If we are a seller, I don't own it. I sell it. I'm taking on an obligation that somebody can put the stock to me, force me to buy the stock at $150 a share while it's trading right now at $221.47. For that obligation, they're going to pay me $1, right? The bid is $1. The ask is $1.40. The mid is where I always try to go for it. GameStop does not usually react on the hit of throwing the trade in. In other words, the market maker plays with numbers a little bit. See what just happened? They just adjusted to 1 by a quarter. Right now it's 75 by quarter. We're not really moving, but the market maker may see some orders coming through and says, okay, let's go ahead and play around with this a little bit. Now, I already have this week and next week's puts sold for myself. So for this setup, we'll go ahead and we'll take it right at the natural, which is actually, no, I'm not going to take the natural. Let's go for the $1, which is the midpoint. I could see the market maker had played some games there and then flips the switch, and this thing goes right back to where it was. So we're trying to sell it for $1. So we place the order. And again, I already have these guys, so I'm not doing them again. This is in a practice account, right? I already have them in my account. We're looking at the July 21st, 150 short put dollar limit. So sell to open one GME, 2nd of July, 150 put at $100 or $1 per share. Right? Once you've read it out loud, and there's a reason to read it out loud, you're using 3 senses. You're seeing it, so you're reading it. That's 1. You're speaking it, that's 2. You're hearing it, that's 3. Less errors, less mistakes by doing it that way. We click yes. Now that order is out there because I negotiated. Unless price comes to that level, it's not coming back. It's not going to just give me the order, fill, because I negotiated that number right now. Let's see. Nate said, I tried option calls before on Robinhood, but when I tried to sell before 3 p.m. on a few with a loss, it wouldn't let me sell, so I quit options on Robinhood. You know, I have a Robinhood account, but I'm using it more for crypto than I am anything else. They also have the ability to get into some IPOs, which I like a lot. Other than that, I use TradeStation, I use TOS, I use Tasty, I use the major platforms as an options trader. You got it, Mike. I'm glad you like the strategies. RSI is a lagging indicator, okay to use if that's kept in mind. So, yes, RSI is a lagging indicator, as most are, but the person I'm talking about, his name is Brandon Wendell. He's an instructor for Wealth Builders. He's a CMT, and he crushes it on futures every month in a live room. You know, if you followed every trade he did, you're somewhere between 15 and 20 grand a month on every trade he does, if you took all of them. And his primary indicator, RSI. So it works. It's just a matter of learning how to use it where it works for you. Aaron, look for the candlestick charting explained. Ryan Litchfield, who's also a coach with wealthbuildershq.com, was co-author and is the only person that has written anything new in the last 20 years on candlesticks. And it's in that book. It's about 100 pages long. And I'll give you a hint. It's all on location. Location, location, location. When you do a spread, does it take away the assignment problem? Voodoo, it does, and it doesn't. Okay? So if you're exercised, the broker has 24-hour notice they must give you to say, or the previous day. It's not even 24 hours anymore. You've got until tomorrow. If you're exercised today, you've got until tomorrow to either A, turn around and exercise your option, or B, come up with the cash or manage that trade somehow. So yes, it does. All right, so we just got filled on our dollar. We got filled on our dollar on that price. You see that, guys? It's got a -1. It's still showing 78 by a quarter. Why? Because somebody moved into that range, into that realm, and got filled there, and we got sucked into that same vortex. Right now, it's 78 by a quarter, by $1.25, right? So we're set up on GameStop. That's a go. Let's see. Just had a bad experience with options on Webull as well. Yeah, Ryan, listen, stick with options brokers. Here, you ready? TradeStation, TOS, Interactive Brokers. Tastyworks is pretty good. Not as good as some of the others, but pretty good. They can't do certain order types in there, which is why I have a problem with it. At least they could not. I'm not saying that maybe they can now. But platform-wise, speed, execution is all good. I think there's some order types that they need to get in there, and they're working on them. They just didn't have them when I had first opened my account. All right? Stick with the majors. Make sure they're an options broker, right? And I don't like www. If you're going online. I like where there's software where you click on an icon and it opens the software up. It's more of that direct access there. All right, so we've got GameStop in place. Let's go ahead back and look at Lilly again. All right, so Lily's starting to climb. Excellent. Has it opened? Let's see. Oh, yeah, it's definitely open. We got no value. Well, look at that. 30 by 40. Wow. Okay. Wow. All right. So we were at 220 yesterday-ish. I'm going to sell the 220 puts for 30 cents. All right? And those puts are for tomorrow. Right? See the mismatch? The market maker has not adjusted that yet. Sell to open 1 Lilly, June 21st, 25th of 2021, 220 put, 30 cents. Ooh, he hasn't taken it. All right. Not sure if there's a misprice or why. But look at what's going on. It's a penny above it. It's 10 cents below, a penny below. This one, the market maker seems to have missed. Do this in a funded account. You catch that, you'll get the fill. You'll get the fill, right? And then you will immediately see that pricing shift back. See, they played with the number. It's okay. We'll see if we come back to that on Lilly. Really, really nice. I do like then the idea of looking into next week on Lilly. So let's see. Probably get my crosshair back. Oh, that line is 215. Okay. So I'm probably going to look to go, if I have to go to next week, I'm going to look to go to 215s for next week. So can I get, there's nothing for next week on the 215s. It's too far out. Let's look back to 220, see if we can get anything for that. 21 cents, not really. So the market maker, they're already looking into next week. They've sucked all the premium out for next week. So not interested in Lilly at this point. We're going to leave it alone. Right? The move is over. The expression is buy on rumors, sell on fact. Fact is out. Their trial is done. They had good results for it on their Alzheimer's drug. So now, if we can't get something now at this point, I'm not going to chase it. I'm not going to try to be part of the continuation run. Who knows? I mean, by the end of the day, we may come $2, $3, $5 back. I don't want to be on the wrong side of that. Being into the trade late. I'm late to the party. I'm just not going to play. We'll leave it alone. So the name of the candlestick book, Tammy, is Candlestick Charting Explained. Make sure it says with Ryan Litchfield. It's the newest version. If you buy another one, it's an old version. It doesn't have the newest stuff in it. So, David, I traded with Fidelity a long time ago. I'm not familiar with them today, how good or good they aren't, but they're an investment firm. So, you know, that always gives me, probably for the wrong reasons, caution of they're more investors than traders, but that I have students that use them and love them. It's no different than, you know, I'm a Sprint guy. You may be a Verizon guy or gal or T-Mobile or whomever, right? And you may hate one of those three with a passion, with vigor. That's okay, right? I like the service that I have. You may not. It's the same thing with the broker. You've got to like them. If you like what Fidelity does, beautiful. You're welcome, Tammy. Okay, just making sure I'm keeping up with the comment step. All right, so we got Lilly. Let me check that off. We looked at ACN, right? Took care of that. We got GameStop. AMC is the next one. I mean, look, here it is. Market's open now for 12 minutes already. We're just getting to the fourth candidate. All right, if I can do something on AMC below this $48 level where I have a confluence of my 21 moving average and the 382 fib line, I like it, right? And again, I already have puts on AMC, GameStop. I'm in them every week right now until volatility goes away. I'm going to take advantage of it. So let's go and look at AMC. Intraday, they're kind of flat-ish. Let's go look here. Can I do anything? What I say the level 48. Can I do anything at the 48-ish level for today, for this week? Well, I can pick up 37 cents for this week on AMC. For 1 day left, today and tomorrow, I've got 37 cents that they're going to pay me, that as long as the stock stays above 48 by tomorrow, I'm good. Can anybody tell me what's the chance that AMC gets below 48 tomorrow? By close tomorrow, what percentage is the chance that AMC gets down there? And it's an exact percentage. It's not a guess. Let me rephrase that. I'm looking for an exact number. There is some. It's not guaranteed. How about that? That's the word I'm looking for. No one is sure. Again, maybe it's just taking a couple of minutes to get in. Ross said 0% chance. Well, there is a chance. There is a chance, Ross, but I appreciate it. 9%, 12. Okay, Sleek, I like the number, 12. So, and it's kind of bouncing, right? Voodoo said 9. What I'm looking at here on this $48 strike is I have a delta. Oh, actually, my bad. I was looking at theta. I have a delta of 9. So 9 is the number. There's a 9% chance that tomorrow on the close, AMC is below $48. You have a 9% chance of being wrong. You know what you're doing here? You're printing money. That's what you're doing. Keep in mind, you can be wrong, though. It doesn't mean it's a guarantee. There's still 9 out of 100 times this is going to go against you, right? So almost 10% of the time, you'll be wrong. But I would venture to say most of you would be very happy if you could be right 90% of the time. All right, bottom line. So we've got 9% or 38 cents for this week. If we go out and look at next week at the 48s, Wow. So I've got a 22 delta. That's a little high for me. I normally don't sell more than a 20 delta. 46. So let's go back and look at the chart. Is there another protection model in there? It's about $40 is what our next protection level is. There's our next fib line, which is the 50 percentile. So if we go and look at the 40s, if I'm willing to go to the 40s, I have a 9% chance of being wrong, and I pick up 73 cents for next week. If you're going to do two contracts, could you do one of each? Kind of ladder your way into the model. All right. And then come Monday, look at another contract for next week if this one expires for this current week right here. Right. So I am going to go back and look. And there's not a right answer, by the way. There's not. Right. 38 by 39. I mean, at 48, 9% chance of being wrong. Now it's 10. I am very pleased with that number. If we sell it, and again, 1 is the easy number to see. It helps you with math in your head of seeing exactly what's going on. Right? We would go with the natural because there's really nothing to negotiate there. I don't know why TradeStation does that. They put it on the ask when you're not going to get filled on the ask. Just leave it at the bid if there's no bid-ask spread. Right? Place the order. Read it out loud. Sell to open 1 AMC 25 of June 2021, $48 put. We're doing it for 38 cents, which is $38.
Order filled.
All right. Boom. We got filled right on the ask, and then it dropped to 30. On the bid, we got dropped to 37. So we got filled, though, at 38 cents on the 48 put. Okay. But how much do you pay 9 out of 10 times when you're wrong? What's the protection? Do you also buy a put? You could you can turn it into a bull put spread. And there's an insurance policy. You're just giving some of your premium back. So if I were looking at next week, watch. If I'm looking at next week and I said I wanted to do the 40s, I think it was, right? The 40s, okay? I could go ahead and sell the 40 and I could buy the 39s. We'll turn it into one contract. It gives me 9 cents on that trade. So you see where the offset is, right? On companies like AMC, what are we relying on? We're relying on the movement. I've got a 7 and an 8 delta on that position. There's only 7 or 8% chance of being wrong. Where do I get in trouble? Well, if the stock goes down below 40, you're in trouble. What does in trouble mean? In trouble means you're going to have a cost associated with it. But let me ask you, we're talking options, but what does it really come down to? It's technical analysis. Are you allowing the stock to get all the way down here before you decide to manage it? Or have things gotten a little awry at that point and you're going, oh goodness, a little late now? Yes. So you're going to set up some form of stop down in here and pull out of that trade, call it a day. Trades will always go against you. Doesn't matter the setup, doesn't matter seller versus buyer. How many people, if they bought a stock, would have bought it at $57 and now it gets to 40 and they're selling the stock at 40, right? Huge risk in buying an equity compared to an option as far as I'm concerned, because you got a 100 delta. Every dollar the stock goes against you, it goes down $1. All right, with an option, I've got leverage because of the delta, and I can also manage my probability of being right in that trade by utilizing that delta to my advantage. Sleek said, I got 466 for the 55 put on AMC Monday morning. So if we look at AMC, and I'm assuming you meant this week, $55 put. And let me close this out. That's next week's. So Sleek said he got 466 for the 55 on Monday morning. Right now, he could exit that trade at $1.80. Nice job. Symbol triumph. You're welcome. Sasha said, when do you take the profit on AMC? Well, if we sold the put for tomorrow, we're allowing it to either expire worthless or we're going to buy it back at a very low price. So if I go and look, open positions, AMC is right here. It's 36 by 38. We sold it at 38. If I can go ahead and take this position now, and let's see, the AMC is loaded in there. I've got one. Okay. I can go ahead and set an order up inside of there for a stop market for 5 cents that says, go ahead, and I sold to open, so I would buy to close. All right, here it is. So move it down a little bit so we can see the AMC order. Buy to close 1 AMC, June 2021, $48 put at 5 cents with the stop market. So in other words, if we get down to that 5 cent price, I'm out of this trade automatically. We call it a day. Right? I look at it tomorrow and it looks like we're starting to show some weakness, and I can get out of the trade for 12 cents, 15 cents, 30 cents. If we're showing weakness on the stock, I may say, you know what? I'm done. Pull the trigger, call it a day, walk away. Right? So that's where you go ahead, Sasha, and manage the position on the way out. You could let it expire worthless. I'd rather not. I'll pay a little bit to get out of the trade and not hold that short option over the weekend. GEVO. All right, so who is GEVO? Oops. GEVO. All right, first thing I have a problem with is there's no weeklies. Doesn't mean you don't trade them. I just don't have as many choices at this point. Okay, so it's an $8 stock. Caution, just period, on lower price stocks. Unless you're trying to short, you're almost always going to be better off just buying the equity, just because of the interest that takes place in them. We've got a nice amount of open interest on this 69, but that's what I would have to use if I was day trading. There's only 22 days left. But if I want to buy a swing trade, I need at least 30 days. I've got to go all the way out in August, and I need at least a 65 delta. So I have a 67 delta here on the 7.5s, and it's trading 160 by 80. So you're 20 cents underwater when you hit enter on this trade. Let me see something here. If I add gamma, here, you know what? Let's do it this way. Let's go look at GEVO. Too much real-time stuff running right now. All right, so 822, 824 is the current price. $9.24, dollar above where it is right now. How long do you see it taking to get up to 9.24? What do you think? Sleek said, I learned to print money from you. Cool. How long to get to 9.24? To make, here, let me move it in a little bit. To make a $1 move, how long do you think? Is it a day? Is it a week? I mean, we move on average. We move 56 cents a day on average from high to low on GEVO. No takers? Okay. There we go. At least 45 days, a week. All right. Let's say it takes a week. Let's say, Clara, you put in a week. Forever said 2 to 3 weeks. right? You guys know, right? Let's say it's a week to make that move. If I go ahead and I buy this option, what we're looking at, it's going to be easier to just load it, right? Let's drop it to 1. By the way, I'm not. This is not a company that I would be buying personally, right? I'm going to buy this at $1.80. I might be able to negotiate the 170, but I'm buying at $1.80. Period. The end. Right? I mean, you're going to buy at that. If you can't get it at the mid price, you're going to buy at that ask, right? So on Givo, going to buy to open the 8, 20, 21, 7.5 call at $1.80. We have a delta of 67. We have a gamma or a hammer, depending on how you want to pronounce it. A gamma of 0.10. Okay. So what happens if the stock goes to, we said 24, right? $9.24. Delta becomes what? Delta is going to go up by the gamma, which is 10 for a $1 move. So delta becomes, it dropped to 66. We'll leave it at 67. It becomes 77. Right? So for every dollar stock move, the option moves oh, I'm going to hit enter in that somewhere. Got a little too big. The option moves 77 cents. All right. So now understand that's on both sides. That's on the bid and on the ask. So if both sides move by 77 cents, let's call it 75. Let's call it 80 just to make it easy math. All right. Just easy math. So $1.60 becomes $2.40 and $1.80 becomes $2.60. Right. Actually, let's grab a pen. We can just write on the screen here. If we add 80 cents to these two numbers, that gives us 80 on top of $1.60 is $2.40 and $2.60. You know what? Let me try to change that. Yeah, white. There we go. No, white's not going to work because we got a white background there, huh? Let's do yellow. 240 by 260. Okay? We buy it at 180. We're going to sell it at 240. No. You said it should go up by 77 cents. Yes, both sides do. You got a 20-cent bid-ask spread. So $1.80 to 240, you've got a 60-cent profit inside of that trade, potentially. 60-cent profit in there. Per share. If I need to wait a week, 3 weeks, 45 days, whatever it comes out to be, I need to wait for this to transpire. That also means the stock needs to move $1 for me to be able to capitalize on those numbers. If you look, it took from the last time we were there 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days, 12 today, and we still have not gone back to that 924. Right? We've been dropping. Right? We've climbed from our low 1, 2, 3, 4, 5. This is 5 days from where we hit the low in that little pattern there from this day, 5 days, and we have still not got back to the 924. So it's not that you can't make money on the option, but here we are Thursday. Guys, if you took this to a different place and went to Netflix, and so, okay, what could we do with Netflix? If I saw Netflix, does Netflix move at all during the course of the day? Here we go. What does Netflix move a day? The wildest average true range is, let's call it $10. It moves $10 a day. I don't need you to pick it all up. I need you to be able to capture some of that overall move. That's it. Just some. Just some. Watch. Here, some of you are going to get this and go, oh my God, I'm not looking at any of these types of stocks ever again. I'm going to pick 3 or 4, and that's all I'm going to trade. That's the only thing I'm going to trade. I've got a group of students that do that right now. We have a live day trading room that they are in, that they're part of, and it's self-managed. They're in there and they are day trading 3 or 4 or 5 stocks every single day. That's it. That's it. Watch what happens. If we go to Netflix, I don't need all these strikes open. Let's just go to 20. I don't need it that big. Let's say I'm bullish on Netflix. It's up $4.42 today. Look what I could do on Netflix. Now, bid-ask spread is a little bit large for where we are already at this point. It should be a little bit lower, but we're about $1. Well, there we go. That's better. That's better. 70, 80 cents of bid-ask spread right now. Right? If we look at this option, we've had 1,500 open interest, 220 volume today. If I look at this 512.5 call, I could buy this right now for $6.10. Right? Per share. Watch. This is the option right here. This is not Netflix. This is the actual option. Right? Now, we had a gap up in there, so it's hard to say with that gap. But from where it closed yesterday, it closed at $4.50 and it ran up as high as $8.50. Let's see. Let's do someone other than Netflix. Since of the move that it had, let's pick somebody else. Let's get somebody that is moved but not has gapped like that. Let's go to MasterCard. See, it's a big move on the markets today, so everybody's going to have that kind of gap up today. Let's go to PayPal. Let's go to 3M. Everybody's got a gap up. Point being is you can get $2, $3, $4. You got a $10 move, and we have a 65 delta. How much does it take for you to make that same 45 cents in a day on an option? If we go back to Netflix again, even if you took the gap, watch. Here, 66 delta. I'm going to click on it just to activate it on the chart. If we bought right on the open, we would have bought at 681. It actually ran all the way up to $9.50. Let's say you didn't get out in that candle, but you did get out somewhere in here. It ran from it actually opened at 7.25. It opened at 7.25. It ran up to 8.25 in 5 minutes. And between the open and 10 minutes later, between the open and 10 minutes, you had a $1 move, which would have given you 65 cents on the option, in and out, retrade the money now on something else. I'm not saying you can't trade those lower price stocks, but guys, if you're going to day trade it, pick a stock like Netflix, pick a stock like Amazon, pick a stock like SPY, and day trade that position instead of some of the lower price stocks. And listen, you trade what fits your risk profile for you. My job here is to make you understand, as an educator, a coach, a trader, to make you understand there are other things you should be trading and the reasons why. There you go. Wall Street Best says there's no, wrong one. These little stocks, you're pretty much looking for an anomaly. When you have a large stock with a $5 range, you have an almost guarantee. And almost, I'll use the word almost as well. It's not a guarantee, but you've got a better chance of being right there. Then Wall Street went on to say there's a mindset that you have to discover on your own. Everyone wants 50 contracts of a small stock and it pays 500%. That's $10,000. That's that's 1 out of 10. I'd say it's probably even, odds are even less than that. Let's see. Tom said, trading in the rearview mirror does us no good. Give us an example in real time. Tom, I don't know what the heck you mean by that. This is not historical. This is happening right now. If you bought it, right? Are you saying tell you something right this second that's moving right now? You mean unlike AMC, unlike GameStop, unlike Lilly, unlike Accenture? Help me out, my friend. What are you talking about? Give me an idea of what you mean. Put me in, coach. There you go, Hector. I love it. I love it. I love it from the song, right? Put me in, coach. I'm ready to play. I mean, you want more candidates? I've got plenty of them. Got plenty of stocks for us to look at. Never a problem. My list, I'll never get through them all. Never. Those of you that were in the Iron Condor class we did a couple of weeks ago here, look for your Iron Condors again. If you have not written your next full monthly options, go write them. I've got mine. Voodoo, I know you've got yours. We talked about that the other day. Tell us what trades you're putting on right now. GameStop, AMC, Accenture. Those are 3 of them, right? Those are 3 right there, Tom, that we're putting on right now from that. Here, let's go look at what happened with Snapchat today. All right. Snapchat had a gap up. It's on my list, but not with that kind of move. I need to pull back to that 65.22 level for me to take it. Let's see. Hey, Matt. Let me go back here. All right. Same thing. We're getting gaps. Everything in the morning. Right now, we're up 278 points on the Dow. I got CNBC on over my shoulder right here instead of me pulling the chart up. It's easy enough to just look over. We got a 278-point move right now. Everybody's gapping. Nobody's pulling back. So for me, Tom, and for everybody, for me personally as a trader, I don't chase. I wait. I did a video this morning for one of our social platforms where I talked about the 3 positions of the chair. Right? First position of the chair is this. I can't reach the keyboard. Too far away. Right now, with the move that has been made on AMAT, this is where I'm at. If AMAT starts moving back down and getting closer to that next red line and the 2 moving averages, the 8 and 21, the red line, 135.58, I go from here to sitting straight up. I come over to the intraday chart and I see that we're bouncing off whatever the line is, wherever that line is, right? We're bouncing off it. I go from sitting straight up to lean forward. That's the 3 positions of the chair. Each one tells me psychologically what I should be doing right now. I am very much let's chase that and see if we can get it. So I created the 3 positions of the chair to stop me from doing something stupid. And yes, I have done that at least one time. We have a video coming out on our YouTube channel shortly that talks about losing $50,000 in a trade. Right? Check it out when it comes out on our channel. There you go, Michael. Appreciate it. Chuck Norris doesn't sleep, he waits. There you go, Ryan. I love that. Let's see. Beautiful, 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 beautiful. Okay. So you guys good? We keep looking at some candidates. I need to hydrate. Someone had asked me one day, I do about between 4 and 5 of these a day of water. It's 28 ounces each. So let's see. You guys want me to take a look at some? Let me know what you got. FUBO. Julie put in SPY. Yeah, we definitely need to look at SPY, Brock. Fubo. This is Fubo TV. Okay. So I do like the relation to the fib line. See, guys, what I was talking about before? Now we got the pullback to that 3240 level. Now it comes down to, can I get options on this that work? Let's see. I want to see one more time. All right. Overall, we're in a bit of a downshift, but that's okay. That's what we're looking for. The bounce taking place. Do we have options that'll work for us? Plenty of options. Plenty of options. All right. So I need a 65 to 85 delta. I've got an 80. That works. 2,962 open interest. I need 100. That works. If you are bullish, this was it Julie? Julie, if you're bullish on Fubo, then the option you would trade would be this $31 call. It's a little bit wide on the bid-ask spread, but you definitely want to try to get in at that midpoint at the $1.73, 56, 66, 76. Yeah, that's just a little caution there, Julie. If you're looking to day trade this, that's a lot of spread on that low price of a position, right? 33 cents. If you were swing trading it, we're going to go out to 30 days-ish. Let's try this one here. I've got a 67 delta, 455 by 480. That's better for that far out. It's also a 30. I've got a 67 delta, 180 of the open interest. That's the position you would look. Now, you've got, from a technical standpoint, you've got to determine where it goes to next. If Fibonacci tells us where it goes, it makes its move up to 38. All right. Someone had in there SPY. Julie, I hope that helps. I trade SPY almost every single day. Moving average crossovers here. Guys, I put out a tweet yesterday. I'm sure they put on another platform as well. But here, let me get rid of the stacking factor that we put in there last night in our analysis. We had this, what I call pressure cooker building up, right? And it happened right below this 422.54 level, which is a major fib level on the S&P 500, on the SPY. We pushed up with a head fake. That's a here kitty kitty, right? Next one, we closed down here. We opened down here. We closed up. Beautiful. We retested that 422.54. And in that same candle, we picked up 30 or 35 cents in that same candle within that 5 minutes. I got this. So I was out of the trade. I was waiting for the pullback to the 8 moving average, the pink line. I got distracted. Not only did it pull back, but two lines or 2 candles, it was back at this level. And then it rocked. So instead of getting 35 cents and getting out of 422.85 or so, it ran all the way up to 424. So we had another dollar move, about another 65 or actually we had an 80 delta. So another 80 cents on our move. I love SPY. Love trading it. On SPY, expirations are every other day. Monday, Wednesday, Friday. 3 times a week you've got expiration. Same on the Qs. 3 times a week. All right, let's see. Plug, Plug. I always go first and do the analysis on the bigger time frame on my Omega Charts platform. It helps me to have a better visual of what's going on. I got a call from a buddy of mine on this a while back. He wanted to buy it. It was trading around that $65-ish level in this consolidation. He thought it was the next phase to the upside, and it just came plummeting to the downside. If we snap a fib on here, so right now the moving averages are in the middle of the fib lines. I wouldn't be taking anything other than a day trade on it, but it would have to pull back to the moving average, which means get back to about 32, close and, a candle close there intraday and bounce for me to even consider it. And 37 would be my target. Plug does have some decent, at least did. I looked at it, said not long ago, had some decent options to it. If you're day trading it, 76 delta, $1.32 is your cost, $1.33 is your cost, 4,500 open interest, plenty of open interest there, right? So this works. If you were swing trading it, you're doing a longer term investment trade. We're looking at least 30 days out, and we're looking at $3.80, 340 by 80, so you can negotiate it at the 360 for the 31. It's got a delta of 66, which means there's a 66% chance that this stock will be above $31 come expiration day. Yeah, Wall Street Best said price compared to paid move you can't beat SPY or the Qs. I agree, which is why we trade them every single day. Joseph said, do you have a return risk probability for call put spreads? So you can't, if you convert this into a vertical, the delta doesn't ring true. It's not real because you're taking a delta of a delta. It's two strike prices you're combining together. So the delta is off. The way we do a spread is you take your sold leg. So if I were doing a bull put spread on plug, and let's say I was selling the 30, the 30 has a delta of 4, negative, but it's still 4. Negative just means it's a put. It has a delta of 4. It tells me there's a 4% chance of being wrong on the trade because my spread, my protection would be my lower level leg, and which is always going to be a lower delta, same or lower. It's not going to be higher. It goes the opposite direction. So you take it based off of that. Yeah, say, hey, I am on every Thursday at 9:25 to 10:25 a.m. is where I'm at. Here, guys, listen. If you want to see the things that I trade, right, there's one thing that you should definitely consider doing, and it's a free video series email that I send out at least 2 times a week, more if I find more, but at least 2 days a week, that I send out with trade setups in them. Right here, watch. I put this together this morning. This is the last 10 trades that we did. Tradewithrob.com/go. All of these trades are documented and on our website, right? On tradewithrob.com. So and I did the last 10 trades. I just went back to the last 10, right? Pep was done on 520. We took the trade. It was bullish. The entry price on the stock was 145.5. Our target was 146.5. That was our first target. Our second target was 148.75. So we made $75 on the first exit and $243.75 on the second exit. All right. Total of $318.75 on that trade. You got to look at the notes too. On LMND, trigger was never hit. We never entered the trade. All of these trades were winning trades in here. Then we got stopped out on Alibaba, right? It cost us $600 on Alibaba. ALXN is the last one I did. It was for the 23rd. Today is the 24th, and that was yesterday, right? We're still in the trade. We entered, but we have not moved, right? We're up $4,200 on the last 10 trades. We took 8 of them, 6-1. One we got stopped out. One were open. Hold on a second. I may have the wrong number now. Oh, no. 8 trades? We got 11. It's 9 trades, actually. It's not 8. It's 9 trades. My bad. That would mean 7 winners. 1 stopped out. 1 went against us. 1 is open, right? We got stopped out. That 1 went against us, right? Guys, I publish this. You get an email and or a text or call, what you want, that says, hey, Rob just published a new video. You want to learn how I trade? This is what I do. Let me ask a question. Did you make $4,200 in the last month on your options trades? Doing one trade at a time, by the way, right? Every other day, couple of days a week, at best, we're putting a new trade out there. Did you make $4,200 in your trades in your last 10 trades that you did? If you did, awesome. Would you like another 4,200? Is it worth it for you to learn this strategy? Since I'm giving you all the information here, ALXN. Here, let's pull it up. Oh, we hit our first target on ALXN. We got into ALXN when the stock was at 180. We got out of our first exit at 181.75. So we got on the bounce there. But where's my next target? That's my home run, folks. My next target is 185.5. So we're already out of half of our trade. We move our stop up to above break even, and we're good. Worst thing that happens is we get wiped out of the second half of the trade, and we're done. This just came out for the 23rd. All right. Let's see. Oh, there we go. I'm not seeing all the text chat there. There we go. Benzinga, we dropped it in there, guys, in the text chat. Saw it across the screen. All right. There it is again. tradewithrob.com/go. Let's see. What platform is this, Steph? I mean, I use Omega Charts, which is a proprietary software that is ours for charts, but you could use anybody, a TradeStation, any software you want. Let's see. Say Hey says, awesome. I get another day of you besides Pop and Power Hour. There you go. Pretty soon it'll be every day. Say Hey. So Joseph said, so what would the risk probability difference between a bear put spread and just a long put to lower the price? So if you're talking about a bear spread versus a short put, Joseph, the risk is you minimize your risk to whatever the next strike price is, $1, $2.50, whatever that is. With a naked put, you have no downside risk. If you gap down and you open against you massively, you're in trouble. You got some costs associated there. So Steph, okay, this is Omega Charts right here. It's not a TradeStation. This is TradeStation, and then the Option Station Pro, I guess it's called. But this is the Option Station component of it. So yes, I'm using both. So Joseph said, shouldn't percentage be more important than the amount so it's scalable? Absolutely. But I did this. The reason I didn't do it on percent is let's do the smallest quantity possible, which in my scenario, Joseph, was you did 2 contracts. What if you only did 1? You only would have taken your first target, not your second on there, right? So you can do this with a very small dollar amount was the whole idea. You're right. I'd much rather look at percentage on my rate of return. But for someone that's saying, should I trade these? And I don't want you to trade any of them for real. I want you to start practice trading them. Learn the system that I use. Listen, in the video, it's 4 or 5 minutes long, maybe 3 to 5 minutes, let's call it. I go over the entry, the targets, the stops. You got everything. Everything you need is right inside of there. Do you set stops and P&L targets for all option trades? Yes, Sean. So again, if we look here, my stop is set on ALXN at 177.5. That will now move up to I can't see the number. Probably about 181 or so is about where we're going to wind up being on our stop, our new stop. If it backs off, we're taking that in the second half of the trade. Always use stops, and my targets are the green lines. That's once the first one is triggered, we go ahead and the next one is put in as an OSO, order submits order. It automatically enters it in. So if I were doing 2 contracts, my stop says get me out of 2, and my target says get me out of 1 if it gets to this level. Once I get to this level, we move our stop up, and an order is submitted to have my target at the 185.50 for the rest of the trade. Not sure why, Sky. You can send an email to support@wealthbuildershq.com and we can get you helped out. But I'm not sure why it won't allow you to register. That's the page right there. It should let you go ahead and register for it. If you get stuck and you're having a problem, let us know at support@wealthbuildershq.com, and we will go ahead and get that taken care of for you. Use any brokerage you want, Trevon. I use TradeStation primarily. All right, excellent. How you doing, guys? Spencer or Aaron, you guys in the back there?
Yes, sir. I just posted a link in the chat.
Thank you. I appreciate it. So it looks like we have hit our mark of the 1025. Guys, did you enjoy it? Was it helpful? Did you get some good stuff out of it?
Where you flying to?
Yeah, David, just tradewithrob.com/go is how you get the alerts.
Right.
Yeah, we do have a couple more minutes, Rob, till our next show. So coming up next, we have Chance Trades. If you guys haven't seen that show, make sure to come check it out. Chance is a great trader, and he's got a cool story. So, but we do have until 10:30. I don't know if you have anything else you want to talk about, Rob.
Yeah, I'm bugging out. I've got to get off to a trade setup that is working right now that I need to go place on an open position that I have. I'm managing that position. So I am going to jet for now. But, I mean, we went through a lot of setups today, guys. Look at AMC, look at GameStop. Keep your eye on Lilly if it gives you anything better than it did earlier. See if the ACN comes through. Put a trade in on the rut. There's so much to be done out here today.
Yeah, that was some firepower this morning. All right, Rob. Well, thank you very much. We'll see you next week.
Cool. All right, guys. Take care. See you then.
All right. Bye-bye.
Bye now.